Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm John Darsie, Editor-in-Chief, and together we bring you the Morning Call Express. So Scott, we still have that tight range building in the S&P and the SPY. The earnings haven't been enough so far to get us out of that range. Yesterday we had good reports from Goldman Sachs and JP Morgan in the financial sector. Those stocks were able to push positive. Goldman especially was very strong, but it still wasn't enough. Do you think earnings so far have been enough to push us out of there, or do you think we're going to need something else as a catalyst?
Well, at this point, price is key, and it's just a matter of how much time we need to consolidate. If we take a quick look at the chart of the S&P, this is exactly what you're talking about in the spiders. If you think about it, though, we've had a really nice move. This was New Year's Eve. This was the first day of the year. Since then, we've consolidated higher, and within this consolidation, we have had spotty, strong action. We've also had some weak action, but as of right now, we're still here. This is 5 sessions right below this 147.28. What I'd love to see today is a nice push through this 147.28, and then we have the old September highs here of about 148.11. Like you mentioned yesterday, Goldman Sachs, nice report at high, showing you, there is stocks to be invested in and traded. Even yesterday, JP Morgan opened down, and look where JP Morgan closed, following the 8-day moving average. So overall, the indices themselves may not be going gangbusters and breaking out, but there are individual issues that are performing very well for the stock pickers out there.
Like we saw with JP Morgan yesterday, this morning we have a report from Bank of America it's sort of a lukewarm report. It beat expectations, EPS and revenues, but the stock is opening slightly lower this morning, nothing to cause concern or cause alarm. Do you think Bank of America could go positive like JP Morgan?
Yeah, right now I think it's down 10 cents. It's just same way JP Morgan, when they tried to sell it first and they couldn't. The stock's come a long way. At this point, will it break above the 12 and change and make new highs and scream? You don't know that yet, but at this point, I think it's in stride. I think you've been holding Bank of America since the 995 or even the 1050. Stay with it. I'm still long it. 1133 is my line in the sand. You take a quick look at the chart here, you will see really nice move with the banks holding above the 21-day moving average. So I think if you're a swing trader, stay with it as long as it stays above the 21-day, and who knows, maybe a little bit later in the day they get enthusiastic and it gets back above 12.
Let's stay in earnings season, and last night we had a report from eBay, which had a very strong report, is opening up at highs here this morning. And do you think this report is something that can ignite tech? We've basically seen the banks hold the market up or push the market higher, and tech has been lagging a little bit. Do you think this report can be a catalyst to have tech participate more broadly in the rally?
I think it'll be helpful. In the last few quarters, eBay's done well. In this one, it's gapping above prior resistance. You look at the chart here, you will see that eBay has been something to stay with. This was a few quarters ago. It also has been trending higher. Tight range. I would say for eBay, as long as it stays above, just say 54.20, I'd like to see it do a gap and go versus, sell the news. I know Amazon, which has been best in breed in high beta tech land, has, it's above the historic highs, holding the 8-day. That could be helpful for Amazon. So I think there's a lot to like in tech. But again, it's pretty spotty.
And yesterday in tech, we also saw Apple show its first signs of life in a few days. The first 2 days of this week, the stock dropped over 3%. And really, a lot of people got really bearish on it. It was sort of left for dead. And a lot of times when you see things overdone like that, that's when you see a bounce come. You got a little bit of an assist from Tom DeMark, the Elliott Wave technician who went on Fast Money and said he thought that Apple was a day or two away from a bounce. What do you see from Apple? Do you think the rally can continue?
Well, let's see if there's commitment. Yesterday, I think a lot of us came in flat, including me. I'm encouraged to the fact that finally you had a real gap and go where you were able to buy the gap up because it held, showed you something different. Now it's gapped up another $3, $4 right now. So if you look at the chart of Apple, I still think there's room for it to do an oversold type bounce, which is what it means right now. There's going to be some resistance coming in around 520, and then you have this major downtrend line that's been controlling the tape since 700 that comes into play a little bit closer to 730. So, from 480-ish back to 520-ish, that's a cash flow type bounce. And then I think, we're going to have to see what happens with earnings, which we'll talk about that strategy as we get closer.
And really quickly to wrap up the Morning Call Express, let's take a look at gold, which is sort of developing an interesting pattern, even though it's been a little quiet intraday.
Yeah, it's as a descending channel, which has been consolidating about a decade move. And if you go to the chart here, it hasn't been powerful, but if you look, you will see you have 2 trend lines here. It's trying to hold right in front of it. I think if the GLD gets above 163.25, finally it gets in motion to get to about 166. And if you look at SLV, it also decent, starts getting above 30.55. Perhaps it tests its trend line all the way up there. So I think that would be good for some of the guys trying to play the metals.
All right, well, we'll get into this and more in depth on the full morning call. We'll see you there.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.